And all of these wins are asset light in nature and should help us maintain a strong growth momentum. Thank you for your support and attending this call. We can now move to the Q&A.
Thank you so much. We will now begin the question and answer. Just to ask a question, that's tone phone. Thank you. You may press star. Participants are requested to use. Ladies and gentlemen, for a moment while the question queue assembles. The first question is from the line of Balaji from IIFL. Please go ahead.
Hi, good afternoon. I have a couple of questions. So the first one is on the cash management segment revenue. While your touch points have gone up by about 12%, I'm seeing that in the last couple of quarters that and 11-12%. Tried some through. So I expect this to settle down to see an acceleration. The question is on where are we order book and is the competitive intensity there? The competitive intensity has catch up at some point.
So let me now over several quarters we have to understand in different business we are a player fairly choosy on the. I think we will foresee, including RMS, takes and whatnot. Estimate what on our execution. Business we have seen years which was led. We have the ATM cash management, and then we have our growth management for the last. See this. Sorry, can people mute themselves because I'm typing while we are talking? So we foresee that the retail business will pick up. And will actually lead the growth in the cash logistics sector for the coming couple of years. So when we talk about the growth trend you're seeing right now of 11 to 12%, it's impossible to tell you what the future, what the growth level will be. I think from our side, we have highlighted that we have a diversified business. Our growth aspiration are in the 15 to 17% sort of revenue growth trajectory till FY25. And we are on course to do it. In some quarters, some businesses will lead. In other quarters, other businesses will lead. I hope that helps you with both the answers. And sorry, finally on your RMS business, we did indicate that we already hit the 100 crore annual run rate. We are about 22,000 sites. We are the largest in the banking sector. We will give you an update on this business in our in our annual investor summit. I think that's the right time for us to talk to you about key developments in all of our new businesses.
Okay, thank you. That is helpful. And all the best.
Thank you. The next question is from the line of Mr. Achal Lohade from JM Financial. Please go ahead.
Yeah, good afternoon, team. Thank you for the opportunity. So my first question is pertaining to the ATMs. Now, we've been hearing about the incremental new orders with respect to ATMs, whether replacement or new ATM, 100,000 ATMs, right? Can you update us as to where we are in the cycle? Are you seeing the delay in terms of getting through these tenders, industry-wide? What are these challenges? And till now, whatever is given out, what has been our market share? If you could help us understand that.
Yeah, thank you. The ATM RFC that we've been, there is still about 51,000 ATM RFPs are likely to be awarded in FY24. That's what we had said, about 20% new and 80% replacement. Of this, there is about of this under the brown label ATM model, right? And so that, as I think we have been insisting on all our calls that we will be selective and opportunistic in our this particular segment. We have been very selective. But as we mentioned in our call that we have won in our first half about 650 crores worth of orders. It's got both asset light managed services as well as our banking automation business in it. There are still some tenders left for the rest of the year.
So I think Achal, overall, the last fiscal year, some key, we are finally seeing in these moving to the finish line. Those orders have to be given. They have to be implemented. They take some time, but we feel fairly strong about the growth opportunity in this, helping us leading to higher growth in our MS and Tech business.
Sure. Just to get a bit deeper into this, 51,000 is the number or 100,000? So can you clarify what?
No, I think the 51,000 is for this year. The 100,000 is something which you're referring to, which is over a 3 or 4 year period. 51,000 we are saying specifically, we know that contracts which will get into awarding likely to get awarded in second half of this year.
Right. And just to clarify, of this 51,000, 20% are new ATMs, 80% are replacement. And of this 51,000, 2/3 is BLA and 1/3 will be bank-owned, bank-operated.
That's right.
Have I understood right?
Yeah. Yes.
And within this 51,000, how much has already been, given out in last 6
This is all going to happen in H2 of this year. So these are already, September, October onwards, RFPs are in various stages of getting closed out or issued out. This is our estimate, right? Obviously, we can't talk on behalf of all the banks, but this is our estimate of RFPs which will conclude successfully in the second half of the year.
Got it. And this 500 crore new order wins, that's to be executed same 7-8 year period, right? Have I understood?
No, I think given the nature of majority of our satellite role in a 3 to 5 year period, not 7 to heavy businesses. These ones will accrue over a shorter period, which is not short. I mean, it's 3 to 5 years.
And 500 share 30% of whatever.
So impossible. Wait for the end of the year to see. It's not a number we track. There's a lot of business opportunity in nature, very focused on that sector. We will be very selective with a few key banks or deals. This is not share is something which we are very RMS.
Just one more question I have.
Mr. Achal,
I'll fall back in the queue. No
yes,
problem.
please. Thank you. So, ladies and gentlemen, the management, all participants in the conference, of question. Prithvish Opal.
Yeah. Hi, good afternoon and congratulations. Question. Working capital. So we, as receiver this was roughly around 90 stuff. Any from the receivable side. Second is that, on our capex side, we have done about a 40 to 41 crore kind of capex in the with the guidance of roughly around 1500 crore to develop over the second half. And if we, we'll that we end up and
So, increase. H1, which is increase. In terms of collection, that's the third one. Last 12 months projects to streamline the collection process. Most important thing is about the as an higher interest rate environment leads to the delay in the payment from the customer. That has resulted in slightly higher AR, and the working capital is increased to some level. About the capex, we have done around 40 to 41 crore rupees of capex in H1. We have guided that in FY24 we will do around 150 to 175 crore rupees of capex, and we estimate that it will be in line to whatever the estimate, the target we have given in the initial period of the year.
Yeah, and on the cash logistics business, touch point wise, how the growth has been between retail and ATM, and specifically any kind of realization gain that we have seen specifically relating to cash.
In our earlier calls, we have said that we will share more detailed metrics on each business only once in a year. But we do give touch point guidance overall. I think breakdowns we will do only.
Oh, sure. And just that's written off also has increased to about 25 crores. And since 15% of ATMs are now under cassette swapping, so shouldn't this number ideally decrease? And what has been the reason for the higher bad debt write-off in the first half? Because it was, I think, around 50 lakhs last year.
No, so you have to read the provision and bad debts together. With the customer, it is. So for right calculation, you have to add both the things. We have guided that because of the nature of our business, the bad debts or the provision for bad debts or risk cost will be in range of 4 to 6%. This time it is in line with that, and in past also it is in line to 4 to 6% only.
Understood. Okay. Thank you. I'll join back in the queue.
Thank you. The next question is from the line of Sheel Shah from Samiksha Capital. Please go ahead.
Hello. Am I audible?
Yes, we can hear you. Yeah, we can hear you.
Yeah, just one question. So any update on our case collection pilot that we were doing with 5 to 6 NBFCs?
Our collections business, I think we said we will use FY24, and at the end of the year, it is ramping up. We have hired a fairly strong team from the industry. We are doing, we have projects where we are working with 8 to 10 large NBFCs already on the ground. However, this will be too early for us to have any determination of how this business will ramp up and is this going to be in line with the way we think the potential is. At the end of FY24 is when we will give you a full status on what our learning has been and also guide you on how we think about this business going forward.
Okay.
Right now, this is an investment year and an incubation year.
Okay, understood. Any other business area that we are doing pilots or anything like that you would like to share?
I think whatever we shared at our investor summit, we have the CashX business we talked about. We talked about the bullion business. We are trying to ramp that up. RMS we have already ramped up, so we have mentioned that. There is nothing on these businesses, see where they head.
Okay, thank you so much.
Thank you. The next question is from the line of Asim from DAM Capital. Please go ahead.
Hey, hi team. So first question was on the RCM business. So on your comment that the next leg of growth will come from retail cash for the cash segment, and I presume you mean post FY25. I just want to know if the anticipated growth is, more touch point.
I think, Arshad, let me re-clarify so that there's no confusion. I don't think the growth is going to be from only retail. I think we see potential growth in all of our key businesses. We feel the higher growth is likely to come from retail just given the momentum we are seeing post-COVID and what we see in the market from a formalization perspective. As of now, that's what we have witnessed in the last 6 to 9 months. Hopefully that trend will continue. In the midterm, actually in the long term, I think the bigger opportunity here is really going to be from more touch points, right? Because that's a formalization opportunity out here. And also our CashX initiative, we see a lot more opportunity coming in from there. From a pricing perspective, I think we've sort of told you about our longer term pricing trends in this industry. I would say volume, expansion of business points, and then pricing would be the way I would think about this in that order.
Sorry. Just to clarify, the pricing, so from what I understand, compliance-driven pricing was more an ATM subject, right? It has not really populated on the RCM front. So maybe on the near term, there should be some catch-up on the retail side as well?
I think on the compliance-led pricing is a benefit we have seen in our ATM business. We will see some of it in retail, but I think retail is really going to be a large driver. The large driver in retail is going to be from formalization and more organized retail touch points which we're handling.
Got it. And the second question, just a clarification. So of the 51,000 ATM RFPs you mentioned that will be awarded over H2, is there any that was already done in H1 that maybe did not come CMS's way because of whatever reason?
No, so we already told you about the wins in H1, right? The wins in H1 are obviously come through basis somebody buying an ATM or a recycler. So we're not counting that. We're talking about what the pipeline is right now. And again, I will again qualify 51,000 ATMs. A lot of it is likely to be BLA. We are not a very highly focused on that sector. We are very selective. But from automation perspective, we will compete as aggressively as we can.
Okay, because I think I presume that of the 650 crore order wins you mentioned in H1, almost all of it was from the product automation and the ATM as a service bit, not BLA and remote monitoring. That's what my understanding was.
You're right. Yeah, most of it is from the automation side.
Okay, thanks.
Thank you. The next question is from the line of Lokesh Manik from Valium Capital. Please go ahead.
Yeah, good afternoon, team. My question was on the pilferage in the system in the form of cash reconciliation and cash lost in transit. So what I understand is we are incurring somewhere around 10 crores per lakh crore of cash handling versus our peers who are doing 3 to 4 lakh crore per lakh crore of cash handling. So I just wanted to understand where is this issue arising, given that we've introduced in-house softwares, Algo MVS, Algo OTC. In light of these, we should not be seeing an increasing trend happening, at least on the reconciliation side. And secondly, if you have observed any area of your operation, right, from picking up cash to overnight vaulting, which segment of the operation is this issue recurring? If you can just share some details, throw some light on this, would be really great.
Sure. So just for to educate you and all the other listeners on the call, comparing the 12 lakh crores to somebody in 3 lakh crores, unfortunately, is not like to like because of the mix of business. The 3 lakh crores, I don't know who the company may be, but I suspect it could be just a company doing retail cash management only. We have a business across all sectors. The reconciliation specific losses, right? They occur predominantly in ATM-related activities. It could be in brown label ATM. It could be in ATM cash management. That's where the large trend line has been till now in the country. But our overall provisions, which you are maybe referring to, and Pankaj can dive deeper if required, will cover multiple things, including reconciliation, any provisions for bad debts, and any SLA penalties which we may be incurring in terms of execution. That's the usual mix. We have said for the nature of our business and our business mix, 4 to 6% is the range we have seen. It was 5.1% at the end of FY23. Right now, at the end of FY24 H1 is about 4.1. And but we would hope this would trend down as our business mix changes over time, and also basis the reconciliation and governance and compliance norms which RBI is mandating across the ecosystem.
Okay. So it is not on your operational legs, right? From picking up to overnight vaulting, it's not occurring there. You're trying to say?
No, not really. I think this comes more from a customer claims and reconciliation-led losses which happen at the point of transaction. It's not linked to the cash losses which may happen while you're transporting currency.
Understood. My second question was a clarification. I read in the DRHP that the government does not permit more than 49% FDI in this segment. Our promoter is an FII, so in that sense, have you received some special approval from the RBI in that regards, in terms of any risk on operations from that area?
I don't think this is applicable to us at all. I'm a little confused as to what exactly in the DRHP you're referring to. But there is no FDI approval required to be in the sector. I think that's already been sorted and cleared out.
Okay. Got it. Thank you. That's it from my side. Thank you so much.
Thank you. The next question is from the line of Pranav Mehta from ValueQuest. Please go ahead.
Yes, sir. Thank you for giving me the opportunity. So my question is about the ESOP expenses. So you mentioned in the notes that we have granted some 8 million options during the first half. So I just wanted more details from you. So first of all, this looks like a pretty sizable number. It's almost 5% of our current equity base. So if you can share with us who all are eligible to get these options, and what are the conditions and the pricing attached to it. And if I think maybe Pankaj can guide us as to what kind of expensing out will happen in the P&L over the next couple of years.
Thank you, Mr. Mehta. See, the ESOP what we have granted is already disclosed whenever we have granted these ESOPs. There is the two grants which has happened. One was in the Q1 and the second one was in Q2. All the ESOPs generally we are granting is close to fair market price. 75% of the new ESOP we have granted but at weighted average fair market price as defined in the ESOP scheme, and 25% of the ESOP issued was only on 10% discount of the market price. We have not given any deep discount was given on the ESOP, and we have not issued any sort of RSU. Though the ESOP was issued on the fair market price and the option value as calculated using Black-Scholes methodology has to be expensed out in the P&L. And second thing is only 50% of the ESOP we have issued will get vested only in case of the performance criteria which is defined in the ESOP policy itself. The cost based on the ESOP what is already granted is next 3 quarters. next 3 quarters, we see that the charges to P&L for the option value will be around 11 crore rupees, and then it will gradually reduce to 6 crore, 4 crore, and 2 crore rupees level. FY25, FY26, FY27.
Okay, thank you.
Thank you. The next question is from the line of Ankit Kanodia from Smart Sync Services. Please go ahead.
Thank you for taking my question and congratulations on good set of numbers. So my first question is related to unbilled revenue. So if you can give me some more color into what are these unbilled revenue, because what I noticed over the last 3 years, our unbilled revenue is growing at a faster pace than our total revenue. So if you can just give us more color as to what are these revenues and how it is reconciled in the subsequent years, that would be very helpful. That is the first question.
So unbilled revenue, the different businesses have a different type of unbilled revenue. If I will talk about the cash management business, the last month, generally the month prior to that, it takes time to around 25 to 30 days to get it reconciled from the customer, and based on that, we bill it. Most of our unbilled are closed, 97-98% is closed in the next month itself, and 3% is being closed in the next one. The managed services business, the unbilled is related to any of the part execution of the contract, or the AMC, wherein the quarterly in arrears or 6 monthly in arrears are there. So where the 3 to 6 months based on the contracts or agreement is being unbilled. We have no, most of our, I believe, 98 to 99% of the unbilled of the last year is already billed for. 1% is pending because of the AMCs or which is not yet allowed to be billed contract as per the contract norms.
And if you can give me more color into which part of the business has more of unbilled revenue and which has less?
Yeah, both businesses have unbilled revenue. Like if I will talk about the month, we provide take the example of September, we provided the service in the month of September. So as on 30th September, there will be unbilled related to September month and some unbilled related to August and prior period as well. But 97% of unbilled in cash business is for that particular month. In managed services business, depending upon the type of business, like BLA is generally for the last month. For AMC other business, wherein based on the agreement terms, it can be 3 months to 6 months of the unbilled revenue.
Thank you so much, sir. That was very helpful. My second question is related to the cash logistics business, where we have 3 subsections. One is the ATM cash, further is RCM, and the third one is cash in transit. I think it would be great if you can just share the competitive intensity in all these 3 subsegments. Where do you see more competition? Where do you see our situation being far more stronger? The second competitor is probably far more distant. And how do you see in the future? I think that would be very helpful.
I think, I'll give you a quick philosophical answer. We are in India. Everybody is chasing growth. There is competitive intensity in all of our businesses. We have highlighted that. I don't think we can go away from dealing with the actual things in market. Both, if I think of our ATM cash or retail or even the cash in transit, each have their own different competitors who are operating in different margin profiles or different growth aspirations. So I think our competitive intensity, I would say, is usually, let's take the smallest business in cash, our currency in transit, what we call DCA business. It is relatively the simplest business, and therefore it has the highest intensity because the barrier to entry, I would say, is maybe lesser, and the expectation from the customer set is also lesser. But as soon as we go into something like ATM or retail, which is linked into having a deep network in the country, having the very strong technology platform for reconciliation, I think that's where our advantage of CMS comes in to help. So I think ATM is generally the one where we have made the biggest inroads, followed by retail and then by the currency in transit business. A lot of currency in transit business is still done in-house with the banks and will get outsourced slowly over a period of time.
Thank you so much.
I think in that we see many more smaller competitors instead of organized players which we see in the retail cash and ATM side.
Yeah. Thank you so much. That was really helpful. Thank you.
Thank you. The next question is from the line of Asim from DAM Capital. Please go ahead.
Yeah, hi. Sorry, Rajiv, just one clarification on the 650 crore order wins. You mentioned most of it is bank automation. That's the product business, right?
Sorry, Asim, we have a lot of banking automation and services business. Both of those are there. All of this relates to MS and tech solutions. What my point of view was that this is non-capex heavy, so that we are not investing capital for these set of wins compared to the wins we had in the last couple of years. I think we are trying to differentiate the two to give you a better idea of why these will. You'll get a sense of the margin profile, you'll get a sense of the capex intensity, you'll also get a sense of the accrual period. The accrual period will be there for a little bit lesser, it will be 7-8 years. We'll accrue this over a 3 to 5 year period.
Sure. So just wanted a clarification, because if most of it is a product, then it should have been seen in margins this quarter itself, and of course that would not be a recurring thing. That's why I wanted to ask.
You'll just see it one time in revenue itself, right? Then the revenue would have a big bump up and then it will go down, right? Yeah, which I haven't seen right now. Yeah.
Okay, got it. Thank you.
Thank you. The next question is from the line of Divyansh Gupta from Latent Advisors. Please go ahead.
Yeah, hi, Mohit.
Yes, Divyansh, you are audible.
Yeah. Hey, just wanted to understand the impact of Hitachi Writers acquisition. How much do we have any exposure to Hitachi managed ATMs? And is there any communication from Hitachi on any transition plans that they have?
So, we can't comment on any speculation about a customer or a competitor, but I think what we have guided to is that we will see more M&A activity in the sector, given the compliance norms are making this sector more attractive for global companies. Given our market leadership, the infrastructure and branch network we have avoided from doing any expensive acquisition because we prefer to grow by gaining market share organically in our core businesses. India is a growing market. There is good growth for all various different businesses. We do expect to see more MNC interest given the compliance, the regulatory clarity on compliance, and also the growth potential.
And are we also in the market for any acquisitions, or right now we're just trying to build the business organically going forward?
No, so we've said this in prior calls. We are, of course, it's our job to be tracking M&A and looking at companies in our sector or expand in our adjacencies. However, we will not be the right people to be buying businesses at a high price because we already have built these businesses. For us to acquire something to just drive growth is not a strategy. I think for us, the return on capital is far more. We want to be very, very careful about that. That we don't want to buy share or buy market growth unless it is very accretive. So we think it will be difficult for us to go do transactions in the cash management space. We would rather take that capital and focus on expanding into new sectors. That's where we think we'll get a bigger return on both our capital and also build a more diversified business with the company.
Hello?
Yeah.
Sorry, got it. Couple of data point questions. What will be your order book for the managed services business, and the number of AIoT sites that are in progress or in the order book?
So our order book for managed services is close to now, gross order book will be roughly about 3,800 crores. Yeah, 3,800 crores, yeah. I didn't understand the second question. What is your second question?
The AIoT, the remote monitoring.
Okay. Okay, so we are currently, Manju, how many sites do we have totally?
22,000.
22,000. So we have 22,000 sites live in the banking sector, both across branches and ATMs right now.
And any pipeline or the order book on which we are working? Or
there's always a pipeline. There's always a pipeline we are working on. When this culminates, we will come and update you. Again, end of the year.
Got it. Last question. What was the total cash handled this quarter?
Cash handled in the cash logistics business?
Yeah. You used to give earlier.
Yeah. It was a second. 3.3. It's 3.3 trillion. 6% growth year on year.
Wait. Hello?
Yeah, go ahead.
Yeah. CMS is not going on the heavy route PLS aggressively. The players in the industry who are doing this, because if this has to come and service that.
Sorry to interrupt. Divyansh, we are not able to hear you properly. Your voice is breaking a lot.
Audible now?
Hello?
Audible now?
It's still breaking. May we request you to join back the queue once again?
Sure.
The next question is from the line of Nitin Sharma from MC Pro Research. Please go ahead.
Yeah, hi. Thanks for taking my question. Firstly, want to understand out of that 3,800 crore order book, how much has been executed so far? And then I have a follow-up.
So out of 3,800 crore rupees order book, we have already executed 2,800 crore order books. To be clear that these order book is executed and the revenue of these will come from 5 to 7 years.
Understood. And just some color on your equipment manufacturing business that you announced 3 quarters back. Some understanding where it is currently and what is the near-term plan for that?
Yes. As we have already told you that it was to align ourselves with the government's Make in India policy and the focus that we wanted to give it to our ATM banking automation business. And also this was very important for us from the point of view because it gives us more control on the supply chain of the critical banking infrastructure, right? And here, as we told you, we have about 2,000 machines capacity per month capacity, and which can be expanded as we go on. And currently, we have what we call as we are yet to get orders towards the manufacturing part of it, and we are likely to see some in the second half.
Certifications.
There are certifications going on.
Understood. Thank you.
Thank you. The next question is from the line of Saurabh from Multi-Act. Please go ahead.
Yeah, thanks for the opportunity. I just have one question. Out of this 650 crore of new order wins, how much is in the nature of, let's say, products business and software and other part of the business?
We don't break down order book wins. But what we refer to in order book wins always refers to as managed services and tech business. We don't give a breakdown by sub-sectors or sub-business units.
Okay. Thanks.
Thank you. The next question is from the line of Mayur Popodara. Please go ahead.
Hello. Congratulations on the good set of numbers. Actually, I wanted some clarity regarding our card services business which we have shown in our presentation. So what this business line is about and how big potential is there in this card service business?
Card business potential.
So if you see that the card business during this quarter has grown from 15.47 million, from 8.16 crore rupees to 24 crore rupees. And for the half year end, it's increased to 17 crore to 42 crore rupees. And last year, we have done around 47 crore rupees of the revenue this year, last year. We got a couple of large orders from the PSU bank, and which will help us to maintain the growth momentum during this year.
Okay, and what is the market size regarding this card service industry?
I think the total
addressable market.
I think the growth in the market, if you think of it, there are 90 crore cards issued in the country. 90 crore cards have been issued, whether it's a mix of credit or debit. The growth potential is really linked to two elements. One is if more bank accounts are opened or therefore more cards are issued, whether they're RuPay or what. Or then there is also a recarding opportunity where every 2 or 3 years or 1 year or 4 years, cards will have to get reissued. So that's where really it's a fairly reasonable size market. There are 4 to 5 players operating in this market there. I don't have a per se of idea right now, which I can remember offhand the size of the market, but we will take that feedback and maybe in the next call we'll give you a sense of the overall market size.
Okay. And the next question is regarding our ATM manufacturing. So we were in the service industry mostly. So why we want to go and get manufacturing on our own? Any process regarding that will be helpful from your side.
Sure. So I think it's a very valid question. We were a services organization. I think we've become now a solutions organization because we have both software and high-end platforms. The reason to diversify or integrate into manufacturing is very critical from a competitive perspective. We are seeing a trend line of large contracts, especially from the PSU banks, which are integrated in nature. And when we talk integrated, they are looking at a single company for both supply, maintenance, managed services, software management, cash management, remote monitoring. And not having that capability would then become a competitive disadvantage. So what we have done is, as you know, our partners on the automation side are largely materials licensed from Korea. We have partnered with them with the technology to set up a manufacturing plant here in which we can manufacture both ATMs and currency recyclers, which is also timed well with the large RFP pipeline in these banks to both refresh and to also expand. So I think that's the investment we made last year. The investment is already part of the capex spends we have done in the prior year. We are leveraging a lot of the technology know-how from our partners in Korea on this.
Okay, it's great to know about that. And just one more question regarding this. Okay.
Mr. Mudra, may we request?
Okay, I'll join the interview.
Thank you.
Okay, thank you.
The next question is from the line of Gaurav Nigam from Tunga Investments. Please go ahead.
Yeah, thank you, sir, for taking my question. Sir, first question was on the cash logistics business. As I understand, there are 3 parts here, right? And would it be possible for you to even historical give a breakup of the revenue? How much is ATM and how much is non-ATM? Even a historical sense of proportion will also be helpful.
So I would say that over the last few years, the ATM side of the business is a larger one, and that will be close to 60% of the revenue. And the retail and cash in transit business will be roughly 40% of the businesses. That's the trend over the last 3-4 years.
Got it, sir. And sir, continuing on earlier participant question on this bad debts which you were indicating. So can you just clarify what do you mean by reconciliation? And as you said, it is not in the transport, it happens somewhere in the reconciliation and there is a penalty. And what can you specify what exactly is the issue? And is this an industry-wide issue or is this specific to us? And is there a 4 to 6 which you mentioned? Is this a norm that all the people are priced it based on 4 to 6% of cost of bad debt?
So let me, maybe this is one of the first calls you're doing, but let me explain this to you. We'll reinforce the fact that this is a combination of 2-3 factors. The first of it is simply just if there is any bad debt. Second is provision for any penalties which you may incur while delivering service. And if the service standards are not met, then you will have some penalties which you have to incur. The third comes through reconciliation-linked losses. The reconciliation-linked losses are mostly, not all, linked to the ATM channel. ATM channel, if a customer does a transaction and they don't get the full money, or there is some discrepancy in the amount of the money in the ATM versus the actual, then there are some reconciliation-linked losses which get passed to a bank. Bank may choose to pass it on to a service provider like us. You will reconcile to figure out where this possibly could go missing. Was it a fault of the consumer? Was it a fault of the cash logistics company? Or was it fault of the maintenance company? So these usually take some time to go figure out. We have actually built in a very strong machine learning based software to be able to sort these reconciliation losses in a quick time. But it is part of the nature of business in an ATM cash management business globally. In India also, and therefore if somebody has a larger part of business in ATM linked businesses, this becomes a larger number. For us, we have said, given our broader business mix is 4 to 6% of our overall revenue, as our mix changes, this percentage will come down. As the RBI compliance on cassette swap gets implemented, we expect this number to start coming down more.
Got it, sir. Got it. Thank you for your detailed answer, sir. And just one question.
Mr. Nikhil, may we request?
Yeah, sure. No problem. I'll come back in the queue. Thank you. Thank you, sir.
Thank you. The next question is from the line of Divyansh Gupta from Latent Advisors. Please go ahead.
Yeah, I'm audible.
Yes, sir, you're audible, but still the voice is breaking.
Let me try once again. So, more philosophical question. So, CMS is investing heavily on the side, right? Because it doesn't want to businesses. That's what is BLA business, if you can throw some light on it.
Divyansh, I unfortunately couldn't understand the question fully because again of the line quality, but I only heard BLA in the end. So if somebody else has the question,
I'll send a mail if that's okay.
Yeah, please.
Yeah, okay. That's all from my side.
All right. Thank you so much. As there are no further questions, I would now like to hand the conference over to Mr. Sarvesh Mota for closing comments.
Yeah, I would like to thank the management team of CMS Info System for giving Antique Stock Broking the opportunity to organize this call. We'll now hand it over to Rajiv for his closing comments. Over to you, Rajiv.
So, just to reinforce, we have seen a reasonably good first half of the year, despite there is some sort of slowdown we have noticed in the last quarter in the rural side. Metro consumption demand trends on currency seems fairly robust. We are seeing good growth thanks to the diversification of businesses, so that if any business is slackening off in the last couple of quarters, some other businesses have taken up the growth. Our pipeline order wins look good. We are very happy at the fact that we are still very focused on high quality businesses and are able to maintain our margin profile and feel fairly confident about achieving our FY25 revenue goal. Thank you for your support. Thank you for your questions. We will look forward to talking to you at the end of next quarter.
Thank you. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us. You may now disconnect your lines.